Hi my dear students, today we are going to discuss another very important chapter. It's CVP analysis. Right? So you will get around 10 marks for this. If you analyze the past papers, so every year we have a question from this chapter. So if you take 2019, question number 5, part B, 2018, question number 7, part B, 2017, question number 7, part B. So likewise, every year we have one question from this chapter. Right? So what's the importance of CVP analysis? So what is CVP? It is cost, volume and profit. We analyze the cost, the volume, the quantity and the profit. Right? So if you take the accounting, right, we divide this into two: financial accounting and management accounting. So financial accounting is what we did the preparation of financial statement for the decision making of stakeholders. It's external. Management accounting is internal, for management, right? So they make their decisions. So when it comes to management accounting decisions, they make short-term decisions, short-term and long-term. Right? So in our syllabus, we have the marginal costing, or else the CVP analysis, which comes under short-term decision making, and long-term decision making about the investment. Right? We have investment appraisal. The last chapter in grade 13, the investment appraisal. So now we are going to talk about short-term decision making technique of CVP analysis. Short-term decision making technique of CVP analysis. So under CVP analysis, right? So first we will talk about the cost. What is meant by a cost? So we need to understand the definition of cost and the types of cost. So here we talk about two main costs based on the behavior. We divide the cost based on the behavior. Based on the behavior. We divide into two. Right? One is fixed cost, other one is variable cost. So what is mean by fixed cost? Fixed cost is the cost which doesn't change with the number of units. Even though the number of production is 0, your fixed cost, let's say the fixed cost is 100,000. Number of units 0, fixed cost is 100,000. Number of units 1, fixed cost will be 100,000. Even this is 1,000, 100,000, this will be same. It doesn't change with the number of units. So we call it fixed cost. Then we have variable cost. What is variable cost? Variable, it changes with the number of units. If you are not manufacturing, or if you are not producing any units, if the number of units is 0, fixed cost is 0. If it increase, if this is 1, let's say this is 100, 2, this is 200, 3, 300. So the curve will be like this: variable cost, fixed cost, and variable cost. Example for the fixed cost, let's say rent expense is 100,000. So even though you are not producing any number of units 0, you have to pay the rent 100,000. Even if you are producing 1,000 units, your rent will be 100,000. So the curve is parallel to the unit. Variable cost, it increases with the number of units. Let's say you are manufacturing tables, the wood cost, wood for the table. Per table, if it is 1,000 rupees, if you are not producing any units, unit 0, no wood cost. 1 unit, 1,000, 2 units, 2,000. So that's the difference between variable cost and the fixed cost. If you take unit cost, if you draw the curve, unit fixed cost will decrease, and if you take the unit variable cost, unit fixed cost, let's say 100,000 units, 0 units, unit cost will be 100,000, unit fixed cost. If the unit increases, the unit fixed cost will decrease. And for an example, rent expense 100,000, 1 unit fixed cost is 100,000. Let's say you are producing 2 units, then the unit fixed cost will be 50,000. If you are producing 10 units, then 100,000 divided by 10, unit fixed cost. For each unit, your fixed cost will be 10,000. So it's decreasing. Curve will be like this. Then if you are drawing the unit variable cost, per unit it's 1,000. If you are producing 2 units, unit variable cost doesn't change. Unit variable cost is 1,000. So this is unit variable cost. So now you know what is meant by fixed cost and what is variable cost. So I want you all to draw this. Then we talk about some important concepts under CVP analysis. Important concept. The main concept in the CVP analysis is contribution. So let me draw a table to show the contribution and calculation of profit. So normally what we do is, in our normal financial accounting, we calculate the profit. How do you calculate the profit in financial accounting? Sales minus cost of sales, then we have the gross profit, right? Then we add other income minus all the expenses, then we have the net profit. Right? This is how you calculate the profit in the financial accounting. Now, in the CVP analysis, the marginal costing, how do you calculate the profit? So we are not using this method. We will use a separate, different statement, right? Because we calculate the profit by analyzing the type of cost based on the behavior. So we have the sales, right? So you calculate the sales. Sales minus variable cost. From the sales, we deduct the variable cost. Then the answer what we get is called contribution, right? From the contribution we deduct the total fixed cost. Then the answer will be the profit. This is the statement we use to calculate the profit in CVP analysis, or the marginal costing. Sales minus fixed cost, sales minus variable cost is contribution. From the contribution, if you deduct the fixed cost, we get the net profit. For example, let's say, assume that sales is 1000, variable cost is 300, your contribution is 700. So what is meant by contribution? Contribution means the amount available after paying your variable cost. So fixed cost, let's say it's 500, your net profit is 200. Right? So this is how you calculate the net profit using the marginal costing. Right. So what are the other concepts? So let me write the concepts. First concept, we learn the contribution. So what is contribution? Sales minus variable cost. You can calculate the contribution from unit or the value. You can calculate contribution number of units or the value. Then we have another concept, contribution to sales ratio. Contribution to sales ratio. We call it PV ratio. Price volume ratio. That's the second concept that we will study. The equation is sales, the contribution divided by sales into 100%. Contribution divided by sales into 100%. So if you calculate the ratio for this, here the contribution is 700, sales is 1000, that means 70%. Out of sales, 70% is contribution, 30% is variable cost. So that's the second concept. Then the third concept, we learn the break-even point, BEP. So what is break-even point? Break-even point means the number of units that you need to produce where your income equals to expense, or your profit is zero. To have zero profit, what should be your the number of units that you need to produce? Break-even point, right? So minimum number of units you need to produce to survive. Right? If you don't have this number of units, so that means you can't even pay your fixed cost. Right? So break-even point is equals to income equals expenses, or else your profit will be zero. Right? So that's the third concept. Then the next concept is margin of safety. Margin of safety. So number of units that you produce more than your break-even point. Right? If your, let's say, break-even point is 100 units, break-even point is 100 units, and if your current number of units that you produce is 120 units, then this difference is your safety margin. You are safe with 20 units. You need to have minimum number of units 100, but now you produce 120. So 20 units, you have an extra safety, right? So we call it margin of safety. Then we have another concept on profit, calculating the profit. So when it comes to calculating the profit, we have current profits. We will calculate the current profit using this statement, right? Then we can calculate the expected profits. What is our expected profit, right? So number 1, contribution. Number 2, PV ratio, contribution to sales ratio. Then break-even point, BEP analysis. Then margin of safety, and calculating the profit. Then one more concept. There is one more concept, which is sensitivity analysis. Sensitivity analysis. So what is sensitivity analysis? Sensitivity means the change when the price is changed. What will be the effect to the number of units? Or if your number of units change, what will be the effect on the profit? What will be the effect on the other factors? What will be the effect on the contribution? Right? So under sensitivity analysis, we learn change in the price, change in the selling price, change in the selling price, and change in the volume, in sales volume. So these are the areas that we need to cover under this chapter, right? So there are different methods. Now, when you are doing these calculations, when we are calculating, right, you take the calculations, right? So when you are calculating, you can use two methods. The calculation can be done in two methods. One is the equation. We use equation. For example, contribution equals sales minus variable cost. Net profit equals sales minus variable cost minus fixed cost, or else net profit equals contribution minus fixed cost, and contribution to sales ratio, contribution divided by sales into 100%. Like, we can use equation. Then the second method is we can use the graphs, right? Like this, you draw the fixed cost, you draw the variable cost, then you draw the contribution, the net profit. So likewise, we can draw the graph and calculate whatever the requirement, right? So can you all draw this? So let's do 2017 A-level question number 7 part B. Right. So the question says, a company is planning to manufacture computers by assembling important components for the use of differently abled school children. Selling price of a computer is decided to be 50,000 and the expected costs are as follows. Right? So when you read a question, you need to understand two main things. One is see whether this question we need to prepare, we need to do the calculation for monthly or annually. Right? So if you go through the question, this question is given monthly and all the calculations required for monthly. So we are preparing monthly calculations. And the second thing, when you are reading itself, understand the variable cost and fixed cost. So we can take the variable costs and fixed cost. Right? Okay. So the selling price is 50,000. Selling price is 50,000 per unit. And they have license fee per month 50,000. So license fee paid per month. So it's a fixed cost. License fee 50,000. It's a fixed cost. Salaries for the supervisor 80,000 per month. It is also a fixed cost. Monthly payments are fixed cost. If we are paying for the units, number of units, then it's variable cost. So the next one, for the assembly worker, we pay 8,000 per unit. So it's a salary for assembly workers, 8,000 per unit. Rent 360,000 per annum. So remember, we are preparing this, we are doing this monthly. So from 360,000, how much is monthly? So divide by month, so you will get 30,000. Rent is 30,000 per month. Insurance 40,000. It is also a fixed cost. Material 12,000 per unit. Material is 12,000. And there are two consultants. We pay 100,000 per month. So this is your selling price. This is your selling price. And variable cost total is 20,000. Variable cost is 20,000. And the fixed cost per month is addition of this. So if you add 50 plus 80, 30, 40 plus 100, 300,000. So first you need to have these values. Then only it's easy for us to do the other calculations. Okay? Right. Then we'll move on to the question. So what we'll do is, I will draw the table to do the calculations. Sales minus variable cost is contribution. Then if we deduct the fixed cost, we get the profit. This is how you calculate the profit, the statement to calculate the profit. Right? So here, again I'll divide this into 3 to do the calculation. And unit cost, unit price or unit cost, number of units, and the total amount. Right. So whatever the available information, whatever the calculations that we put from here, we can record in the statement. So unit value, make it value. Sales, it's 50,000. Sales unit value is 50,000. Unit price is 50,000. And the variable cost, each unit, this is each unit. Per unit we pay for the assembly 8,000, material we pay 12,000 per unit. So 20,000 is the variable cost per unit. So the contribution per unit is 30,000. And the total fixed cost per month is 300,000. This is total cost. Right? So these are the informations available. So using this we can do all other calculations. Right. So let me explain. Question number 1. Question number 1. What is the monthly total fixed cost? Indicate each item separately. So here you have monthly fixed cost indicated separately. So answer is 300,000. We can write monthly total fixed cost. Monthly total fixed cost is 300,000. That's the answer for number 1. Number 2. Number of computers to be sold monthly to cover the total cost. What's the number of units we need to sold? Number of units to cover the total cost. So how do you calculate? This is your break-even point. This is your break-even point. To have zero profit, you need to have the total contribution of 300,000. We are going upwards. To have 300,000, to have the profit zero, or to have income and expenses equal, we need to have a contribution of 300,000. To have 300,000 contribution, how many units you need to produce? So that is equals to 300,000 divided by contribution per unit. So it is equals to, it's your break-even point. Fixed cost divided by contribution per unit. So we calculate 300,000 divided by 30,000. It's 10 units. 10 units. Okay. So number of computers to be sold monthly to cover the total cost. To cover this total cost, you need to produce 10 units. This is calculated 300,000 divided by 30,000. Okay. Right. Then the next question. Number of computers to be sold monthly to earn a profit of 150,000. Right. Let me change this. Now I need a profit of 150,000. I need a profit of 150,000. To earn 150,000 profit, I need a total contribution of 450,000. 450 minus 300 only will be 150. So to have 450,000 total contribution, unit contribution is 30,000. How many units I need to produce? So to have 150,000 profit, right, I need fixed cost plus expected profit divided by contribution per unit. So 300 plus 150,000, 450,000 divided by 30,000. So we get 15 units. 450,000 divided by 30,000 is 15 units. So we need 15 units to earn 150,000 rupees as profit. So I'm using the same table to answer all the questions. Then the next question. Number of computers to be sold monthly to cover the total cost if the assembly workers are paid a total monthly salary of 80,000 instead of a unit based salary. Now what happens, your variable cost and the fixed cost is changing, right? So let me change the values. So price didn't change, but variable cost and fixed cost is changed. The number of computers to be sold monthly to cover the total cost if the assembly workers are paid a total monthly salary of 80,000. So there we are not paying 8,000. We are paying assembly as the salary, assembly workers 80,000 monthly salary, right? Then now your fixed cost is 380,000 and variable cost is 12,000. So take that value here. Variable cost is 12,000, fixed cost is 380,000. So now what is your break-even point? To have zero profit, you need to have 380,000 total contribution, and this is 38,000. So number 4, let's calculate the answer. 380,000 divided by 38,000, it's 10 units. So that's the number of computers to be sold if the assembly worker's salary is not paid for units. We are paying monthly salary. Then your answer is 10 units. So this becomes 380. This became 12. So unit contribution is 38,000. Total fixed cost is 380,000. So we calculated 380,000 fixed cost divided by unit contribution 38,000. Then the last one, number 5. So this is number 4. Number 5. Now what happens? Number of computers to be sold monthly to cover the total cost if the salary paid to an assembly worker could be reduced to 30,000 per unit, 3,000 per unit by automating the assembly line. It is estimated that this automation would increase the annual fixed cost by 180,000. So now again our cost is changing. Now let's see how much is the variable cost and how much is the fixed cost. Assembly worker's salary could be reduced to 3,000. Now this is reduced to 3,000 means this is 3,000. Reduced by means this will be 5,000. Okay. Now this is 15,000. Variable cost will become 15,000, and you have now already there is 300,000. Then your fixed cost will increase increment. How much is the increment? If you write 180,000, then you take 480,000. Is it correct? No, it's not correct, because as I said earlier, this is monthly, right? So monthly means you have to take monthly increment. All these values are monthly. So 180,000 per annum means 15,000 per month. So total fixed cost is 350,000. So again, I come back to the statement. Price didn't change. Right. Fixed cost is 315,000. Fixed cost is 315,000 and the variable cost is 15,000. So 50 minus 15 is 35,000. So if you want to have a zero profit, minimum number, we need to have a total contribution of 315,000. So 315,000 divided by 35 is 9 units. Right, so we need a minimum 9 units monthly to cover this cost. Okay, so that is 2017 paper. Right, now we'll move on to another question. Here it's 9 units. Let me explain 2015. Right. So I can write this. Let's do 2015 11, question number 5, part 6. Question number 5, part B. Right. So, like we did in the previous question, let's identify whether it's annual or monthly, and let's identify the variable cost and the fixed cost. Mr. Nagendran is planning to start a private school in Colombo. The expected income and cost of the school are as follows. Fees per student and the cost given monthly. Required annual contribution per student, annual total fixed cost, the number of students required to be admitted to cover the total annual cost, the number of students required to be admitted to earn a profit of 240 if 50 students are admitted, and the course fee of 10 of them are waived off, the expected profit or loss. So you can see the questions are for annual. So we need to calculate the variable cost and the annual fixed cost. Right. So let's first we'll take the selling price. Fees. Student fees. Registration 12,000 per annum. Registration 12,000 per annum. Facility 12,000 per annum. 12,000. Then the course fee 10,000 per month. So if it is 10,000 per month, we need to multiply by 12. Then only you get the annual student fee. So 144,000. That is student fee, 144,000. Then let's calculate the variable cost and the fixed cost. Variable cost and the fixed cost. The costs are given: printing of course manual 4,000 per month per student, right? Printing manuals, how much is per annum per student? You need to multiply it by 12. Stationery 3,000 per month. Sports expenses 1,000 per month per student, right? So these are the variable cost per month. 8,000 per month. Then to get the annual, you need to multiply this by 12. To get the annual cost, multiply it by 12. So how much you get? 96,000. 8,000 per month multiplied by 12. Total 96,000 is the variable cost. This is the selling price. Now the fixed cost we need to take annual. Rent 40,000. Salaries 30,000. All these are given monthly. Advertising 10,000. 90,000 per month. So multiply by 12. Then you will get 90 into 12. It's 80 into 12. 960. 960. Fixed cost per annum. This is variable cost per student per annum. Right. So these are the information that we have. Right. We'll take this information to our table. Sales minus variable cost is contribution, minus fixed cost is the profit. Okay, here we have unit value, number of units, total value. Okay. So we have calculated the sales price per unit. Per student we charge 144,000. So that is your selling price per unit, 144,000. Each student must pay 144,000 per annum. Then the variable cost per unit per student is 96,000. Variable cost per student is 96,000. And total fixed cost is 960,000 per annum. So these are the information which is given. Right. So let's calculate the contribution per unit, which is 144 minus 96, 48,000. Contribution per unit is 48,000. Now we'll go back to the questions. Question number 1. Annual contribution per student. Annual contribution per student. So what is the annual contribution per student? This is unit value, means per student. Per student. 48,000. How did you calculate? Unit selling price minus unit variable cost 96,000. You can do the calculation here. Then number 2. Annual total fixed cost of the school. Annual total fixed cost. How much? 960,000 we have calculated. Monthly is given, multiply by 12, so you get annual fixed cost. Number 3. The number of students required to be admitted to cover the total annual cost. They are asking this. Right. Every question is very much similar, which is break-even point. To have zero profit, we need a contribution of 960,000. Then how many students do you need? Number of students. So 960,000 divided by 48,000. 960,000 divided by 48,000 is 20 students. So we need minimum 20 students to cover the cost. 20 students required to cover our cost. Right? Okay. So we move on to the next. Number 4. The number of students required to be admitted to earn a profit of 240,000. Right. Look at this. Now this won't change. Now we need 240,000 profit. To have 240,000 profit, we need a total contribution of 240 plus 960. We need 1,200,000, because if you are going upwards, this will be added. Then we need 1,200,000. To have 1,200,000 total contribution, how many students do we need? So that is 1,200 or 1,200,000 divided by 48,000. Then the answer is 25. So 25 students. So previous one is 960 divided by 48. Then you got the answer 20. Now we wanted 1,200 divided by 48. 1,200 means 960 plus 240. Expected profit. Fixed cost plus the expected profit divided by contribution per unit. So question number 5. If 50 students are admitted and the course fee of 10 of them are waived off, the expected profit or loss. Right? So we are admitting 50 students. So you calculate the contribution for 50 students. There are different methods. I will explain few methods. Right? Already we have calculated the contribution, which is 48,000. Right? So what we can do is, we can calculate the total contribution of 50 students, 2,400,000. Right? Out of this, we are not getting the course fee of 10 students. So course fee per student is 120,000, and we are not getting course fee of 10 students, which is 1.2 million. Right? So if you didn't get 1.2 million, that means you will get only 1.2 million. Then minus 960, the profit will be 240,000. So let me explain in another way. Right? Let me explain in another way by taking individual values. Right. So we have 50 students. Right? So out of these 50 students, 40 students will pay 144,000. Out of these 50 students, 40 students will pay 144,000, which is the total course fee. Total fee including registration, facility and course fee, which comes 5,760,000. Right? 40 students. And another 10 students, they will pay only the registration and facility. They won't pay the course fee. Then how much will they pay? 24,000. So they will pay 24,000. So the income from them is 240,000. Income from them is 240,000. So the total sales income will be 240,000 plus 5,760, which is 6 million. And the variable cost, we need to spend 96,000 into 50 students, 4,800. Then total contribution 1.2 million, and your profit will be 240,000. Right? So this is how you do the calculation for this question. So 10 marks given for this. So next question, 2014. We'll discuss 2014. Question number 5, part B. 2014, question number 5, part B. Right. So here they have given, the company has undertaken to introduce and sell a new product at a trade exhibition to be held for 10 days. So they are going to have a trade exhibition. So for the trade exhibition, they are going to introduce a new product. This product is provided to the company by its supplier at a cost of 4,500 per unit. That is, we are buying at 4,500. Although a unit of this product is expected to be sold at price of 8,000, a 20% discount on this price will be offered at the exhibition. The expected costs are as follows. So let's calculate the selling price. Right? Variable cost and fixed cost. Let's identify these values from the question. So there is a cost 4,500 per unit, which is our variable cost. Yeah, purchase cost. It's our purchase cost. Then this product is expected to be sold at 8,000. Selling price 8,000, and we are giving a discount of 20%. So 20% discount is 1,600 minus. So 8,000 minus 1,600, 6,400. 6,400 is the calculation. From 8,000, discount is deducted 20%. 1,600. So we are selling at 6,400. Then the other costs are given. Rent is a fixed cost, 40,000. We pay rent 40,000. Printing cost for the leaflets, paying 5,000. Printing cost 5,000. Allowance to the manager of the store. Manager, we are paying 25,000. Allowance to a sales assistant per day, 1,000. Allowance, sales assistant. Now below that they have given there are 2 sales assistants will be recruited for the period. So this is allowance for one assistant, 1,000. 1,000 is for one assistant per day. So there are 10 days, multiplied by 10 days and 2 assistants. Then you need to multiply 1,000 into 10 days into 2, 20,000. For sales assistant cost will be 20,000. Per day we are paying 1,000. For 10 days per assistant we will pay 10,000. For 2 we need to pay 20,000. And price of a cup gifted with every unit of the product. So we are having another additional cost. Cup, 100 rupees. So 4,600 rupees variable cost. Selling price is 6,400, and the fixed cost. Let's calculate the fixed cost. 40,000 plus 5,000, 25 plus 20,000. 90,000 total fixed cost. Then if you take this into the format, sales minus variable cost is contribution minus fixed cost is profit. Unit value, number of units and the total. So the selling price is 6,400. Selling price is 6,400 per unit. Per unit is 6,400. Variable cost is 4,600, and the fixed cost, total fixed cost, is 90,000. So these are the information. Now it's easy for us to do the calculations. Number 1. What's the total fixed cost? Total fixed cost is 90,000. We have calculated the total fixed cost. Rent, leaflet, manager, allowance for sales assistant. Number 2. Units to be sold to cover the total cost of the activity. That is your break-even point. So 90,000 is the fixed cost. To have zero profit, we need 90,000. And the contribution per unit, 6,400 minus 4,600, 1,800. So how do you calculate? 90,000 divided by 1,800. 50 units. So how do you calculate? Fixed cost divided by contribution per unit. 90,000 divided by contribution per unit is 1,800. It is 50 units. Okay, this is the equation. And this is, you can use this format to calculate the number of units for break-even point. Break-even point is 0. To have 0, we need 50 units. Units to be sold to earn a profit of 270. Now what happens? We need 270 profit. To have 270 profit, how much contribution, total contribution is required? We need 360,000 total contribution. So 360 divided by 1,800. 200 units. So how do you calculate to have a expected profit? Fixed cost plus expected profit divided by contribution per unit. So 90,000 plus 270,000 divided by 1,800. This is the equation, right? 1,800. So answer is 200 units. To have 270 profit, we need 360,000 total contribution. Unit contribution is 1,800, and the total number of units should be 200. Then the fourth one, the last question. Profit earned at 100 units of sales when a 10% commission on the selling price is paid to the manager for every unit sold, in addition to the allowance paid to the manager. In addition to the allowance paid to the manager, we are paying another allowance, another commission. Now our variable cost will change. Commission. How much is the commission? Now the selling price is 6,400. We will pay 10% commission, which is 640. We will have to pay another 640 as the commission. So the total variable cost will become 5,240. Selling price will be same. Variable cost changed, 5,240. Fixed cost is 90,000. Now again we can change. Our contribution per unit will change. Fixed cost will be same as 90,000. Variable cost 5,240. Then 6,400 minus 5,240 is 1,160. Now they are asking us to calculate the profit at 100 units. So if we are selling 100 units, our total contribution will become 116,000, and fixed cost is 90,000. The profit will be 26,000. Right. So this is how you do the calculations for this question.